Hello, people. Welcome back. Have you ever looked at the chart and wonder why the price suddenly takes off, then slows down or reverses? That's a battlefield between impulsive and corrective moves. And today we're breaking it down. Welcome back. I'm Gonzalo, and in today's video, we're diving into one of the most important concepts in trading impulsive and corrective moves. Once you understand these two, you'll start reading the markets with a completely different mindset. So, the market is basically a battlefield where there's a constant fight between buyers and sellers, or as we like to call them, bulls and bears. As traders, we're essentially trying to read the footprints of the speculators, because what we want to do in the markets is that we want to identify where the so basically where the impulsive moves are going to be created, because we want to make money out of the markets, and we only make money out of the markets when there's impulsive moves. We can do it when there's corrective moves, but that's more when the price is bound on a corrective move, where basically it's bouncing between support and resistance. Um, with that said, the market uh, works accordingly to supply and demand, where we have when the price is correcting, we have a balance, and then when the price is moving with strength, we have an impulsive move. So when supply and demand are in balance, price tends to move uh, sideways. With that said, it's basically stagnant or in consolidation. So you just move in a corrective manner, um, where an imbalance or an impulsive move, say there's more buyers than sellers, the price will move impulsively in one direction of that pressure. So if there's more buyers than sellers, the price will move up. Where if there's more sellers than buyers, the price will move down. As we can see on the charts over here, we have loads of impulsive move to the downside. So that means that there's more sellers than buyers. And then on this leg, we have more buyers than sellers, and therefore there's an impulsive move to the upside. And then we are in consolidation, basically, where we even form a pattern where the prices basically move in between the support and resistance, not very much there. But then we can always add this support over here. So the key distinction between them is that an impulsive move is when the market has an imbalance, and then a corrective move is when the price has a balance. There's no clear winner, and the price reflects that by slowing down or moving sideways, which is what we got on the chart right now. So, what does an impulsive move look like? As I've explained before, impulsive moves is when the price moves very strongly to one side of the chart, either up or down. And then a corrective move is when the price moves sideways. So, as you can see here, we formed a pattern to the downside. That's a corrective move. And then we broke out of that pattern and move upwards. A corrective move, as I've said before, is just when the market is moving sideways. So this is how the market structures are formed. This market structures is when we can identify if we are in a bullish or bearish trend. If I go through what a market structure is basically if we're doing a higher highs and higher lows, we are on the bullish trend, and if we're doing lower lows and lower highs, we are on the bearish trend. So, for example, if we start mapping out market structure, probably go on the daily so we can see a little bit better. So, for example, here, if we can identify, we have broken out this structure around here, so we're in the bullish trend, and therefore, until we break this low, we're on the bullish trend. Then we can only identify the next higher low, as soon as the high is broken. So this high is broken. So we are still in the bullish trend, and we carry on as so until the next lower high is broken. And therefore, this is the first sign that we are in a bearish trend. So we now are on the bearish trend. And then either the lower low or the lower high is broken. In this case, the lower high has been broken, and therefore we are now on a bullish trend. And until that high is broken, we are still in a bullish trend, and anything in between we will be consolidating. So this is basically how the market works with impulsive and corrective. Is basically supply and demand all day long. Is that if we have a balance in between supply and demand, the markets will move or consolidate in between the range. And then when we are in impulsive move, so we have more buyers than sellers and imbalance in the market will move impulsively, therefore with strength. What we want to do when we are on the charts is that we want to identify when there is a correction. It doesn't always work perfectly because the markets, we cannot predict every single thing. But for example, we have a correction on the chart over here in between Monday 23rd September to October the 9th, and we broke out impulsively to the upside. But then we carry out the market done another corrective move, I would say, and it broke down, to which we could potentially see more bearish momentum. However, because we are still on the bullish trend, because this low hasn't been broken, we will identify this as the last point of reference of this structure, and therefore why the reason why the market moved to the upside. Until the low is broken, we are still in supposedly on a bullish trend, but we never know what the markets are going to do, and therefore we do need to make our strategy, or have rules on our strategy that makes us trade in a way that we already know that is a winner, and therefore just applying on the markets. We will not win every single trade. However, we do our best to follow our strategy, to which we test and then carry out and putting on the markets to make money from the markets. So with this example, or with this video, I hope that you have taken some value, and the next time you look at the chart, you can identify impulsive and corrective moves. Ask yourself if it's moving. Is it because it's an impulsive move, or is it on the consolidation or corrective move? And if you find this helpful, I hope you did got at least some value out of it. Make sure to like or subscribe and drop a comment down below. Uh, and do you prefer trading impulsive or corrections, or both? Because you could make a strategy where you trade mostly on corrective moves, which you can identify support and resistance levels, and from those support and resistance levels, you just make a quick buck in between them. Or if you prefer, basically look at correction moves, enter when the breakout occurs of the correct of those corrective moves, and then make a bigger move on that breakout of the pattern. It all depends to you. So comment down below. If you want to give some feedback on this video as well, I would do appreciate. I'm just really starting to make these videos more often. And if you give feedback, I can always try to improve myself a little bit further. So thank you for watching, and see you next time.